Should government impose a wealth tax? Hi everyone, today I'd like to discuss one of the most controversial issues in public finance and political economy. Should government impose a wealth tax on the richest members of society? In recent decades, wealth inequality has increased in many advanced economies. While incomes have risen modestly for much of the population, the value of financial assets, real estate, and corporate ownership has grown much more rapidly. As a result, a relatively small proportion of households now controls a substantial share of national wealth. This trend has prompted renewed interest in one policy proposal, the wealth tax. Unlike an income tax, which is levied on annual earnings, a wealth tax is imposed on the total value of an individual's net assets, including stocks, bonds, real estate, and other forms of property. Supporters argue that such a tax promotes vertical equality, the principle that those with greater economic capacity should contribute a larger share to financing public goods. They contend that wealth often generates additional wealth through investment returns, allowing economic disparities to widen across generations. A wealth tax could therefore reduce excessive concentration of economic power while generating revenue for education, healthcare, and infrastructure. Another argument concerns equality of opportunity. Large inherited fortunes may provide advantages that are unrelated to talent or effort. Access to elite education, influential social networks, and investment capital often depend heavily on family wealth. If economic success increasingly reflects inherited assets rather than individual merit, social mobility may decline. A moderate wealth tax, proponents argue, can help preserve a more competitive and meritocratic society. However, critics raise serious objections. The first concerns capital formation. Wealth represents accumulated savings that finance investment in businesses, technological innovation, and productive assets. Taxing wealth annually may discourage saving and reduce long-term investment, potentially slowing economic growth. Another challenge is capital mobility. Unlike land or labor, financial capital can often move across national borders. If one country imposes a significantly higher wealth tax than others, wealthy individuals may relocate their assets or residence to lower tax jurisdictions. Such capital flight could reduce investment and weaken the intended fiscal benefits of the policy. Administrative feasibility also presents difficulties. Valuing privately owned businesses, artwork, intellectual property, or other illiquid assets is often complex and costly. Disagreements regarding asset valuation may increase compliance costs and create opportunities for tax avoidance. For this reason, some economists argue that governments should strengthen inheritance taxes, property taxes, and/or capital gains taxes instead of introducing a comprehensive wealth tax. In my opinion, governments should address excessive wealth inequality, but policy design matters enormously. A wealth tax may be appropriate under carefully defined conditions, particularly when targeted at extremely large fortunes and accompanied by international cooperation to reduce tax avoidance. Nevertheless, any tax system should preserve incentives for entrepreneurship, investment, and productive risk-taking. The objective is not to punish success, but to ensure that economic prosperity contributes to broad social welfare. Ultimately, the debate is not about whether wealth itself is desirable. The real question is how societies can encourage wealth creation while preventing excessive concentrations of economic power from undermining equality of opportunity and democratic institutions. So here's my opinion. So here's my question. Should governments impose a various tax on the richest citizens to reduce inequality, or would such a policy ultimately discourage investment and weaken long-term economic growth? I'd love to hear your thoughts. Thanks for listening. See you next time.